The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, we saw a bit of spread trade action in corn and soybeans and a rough day in the wheat market on Wednesday. What is going on with this wheat trade? We're going to try to make sense of all that. We're going to talk about livestock and much more. Joining us here today with market analysis, we welcome in our good friend Mike Zuzolo with Global Commodity Analytics. Mike, always great to catch up with you. Another week upon us here where we're watching every weather forecast model run and watching everything else that's going on impacting this market trade. But hopefully, so far for you, it's been a stress-free week, Mike.
Oh, yeah, it's WASDE report week, Jesse, and that's when I really hit the Pepsid really hard. So, we're drinking a lot of coffee, eating a lot of Pepsid, getting ready for WASDE on Friday.
I forgot all about the WASDE report. So good point there. That's just another thing we got to throw in front of this market trade coming up here at the end of the week. Well, let's start our conversation. I hit on a couple of the main things, main features I saw. A little spreading in corn and beans. I know we'll get to that, but this wheat market, we had the news of that dam explosion in Ukraine, gave us some friendly support. We got news that this Australian crop is getting smaller. There's concerns about quality of China's crop, etc. But yet, wheat down hard on Wednesday. I'm trying to make sense of this. Can you maybe explain some of the things you're seeing in this wheat trade and just why we can't rally right now?
I can try. I think the part of it is the spread price action, because we are seeing a continuation of the past couple of weeks of the hard red taking a big hit compared to the soft red. So I think the funds are probably unwinding that. I'm guessing that's harvest related, but you bring up a huge point. The two big things that would make me think that the wheat was going to lose 30 cents on Wednesday, other than you and I were going to talk, and so we were going to have to talk about a negative wheat market anyway, is the idea that we're harvesting, but we're not harvesting. I'm getting very few harvest reports. I've been talking to a lot of people in Kansas, Central Oklahoma, nothing. The only thing I've been hearing maybe is Wichita Falls, Texas, getting 30 bushel yields. I talked to a colleague that has a son that works for a large elevator in Central Oklahoma, and he said they're still probably 4 days away. So maybe the futures market's trying to price in harvest coming up this weekend, but I wouldn't say that yet. And I think the second thing that you would think naturally is that Black Sea issue. And we had heard earlier today that we were going to see the big parties get back together on Friday, this coming Friday, to talk about extending the deal. But mid-session, I also saw a Newswire story where the big holdup for Russia is their ammonia exports, and their pipeline's been damaged so badly it's not fixable for the next 30 to 60 days. So the question was, will they even meet? And so I really don't see anything supply-demand-wise or Black Sea-wise that would break this market back, especially in light of that big Saudi Arabian purchase earlier this week. And we had a lower dollar today and a higher crude oil market as well. So I guess the only last thing that I would say that could be in the making or at play here is the Chinese markets, the Chinese economic data. This chart is showing the Chinese Shanghai mainland China index, equity index, against the Bloomberg Commodity Index on a 10-week basis. And we see that this is still a very positive correlation. And I'm in the mindset that this is still holding us back, and especially in the wheat market and especially in the crude oil market, especially given Saudi Arabia's surprise cut of 1 million barrels a day announced on Sunday. And I'll throw one other thing out at this chart, Jesse. It's kind of neat. We always say correlation is not the same as causation, but I would point out to you that notice in the end of 2021, beginning of 2022, we went from, positive, essentially where we are right now, to very negative, over 90% negative And then by the first quarter of 2022, we'd carved out a low. And by the fourth quarter of 2022, we were right back up to where we are now. Those were the good times for the commodity markets. And so I do think the Chinese market is closely associated with the commodity fund buying, especially those index funds.
Well, and we've talked quite a bit about China, and I feel like that is, you bring up a great point. It's kind of this overarching elephant in the room, so to speak, throughout the entire ag market. Everything is connected globally, and a lot of what's happening in China is having an impact on demand for our commodities, our grains and oilseeds, especially, Mike.
Yeah, and I think you really hit upon something that the next 6 to 9 months, in my analysis, I've got a thesis, I've got a theory, kind of like the New East, New West mindset that we've talked about, these new trading blocks, these new geopolitical blocks based around climate change and developing versus developed market world. Well, I'm getting that a little bit more fine-tuned with the idea that if China doesn't buy as much as they normally do, that puts excess supply on the world. And then all of a sudden we start to see the trade think the United States is going to bring imports in, just like we have in hard red wheat, just like we have in soybeans. Maybe we could in the corn if the second crop, Brazilian crop, is there. I talked to my South American colleague today. I'm still not there above 125 yet. I just can't get there based upon everything I know right now. But be that as it may, I think the trade is getting more comfortable with the idea that if the price in the United States is high and high enough and China's not buying, then it could backwash into the United States. And we've seen that already. And I think that's a real element that is going to be more and more important unless we have crop problems here in the United States and kind of drain this excess supply around the world by our crop problems.
Since we're on the topic of wheat, I want to pull up another chart on the video feed and look at the SRW versus the corn lead month spread. And I know with the case of SRW wheat, if you are a chart watcher, it looked like we failed to take out the top of a descending channel yesterday on the charts. So it's just one note that I saw. Maybe you saw that as well. Talk about that. Talk about this chart looking at this spread right here between wheat and corn.
Yeah, I mean, this is still this is, I call this the concrete shoe chart for the corn. I mean, until we get that wheat price back up above a feed grade quality price, we're going to continue to fight in Asia and in South America, wheat going into the livestock rations. And I think that's just going to be a continuation of the funds not really wanting to take the corn up sharply, even with droughts potentially forming in a wide swath of the central corn belt. Why wouldn't we be above 550 in December corn right now, especially with July corn still above $6? If we've got 50% good to excellent conditions in corn in the state of Illinois versus 82% or 81% a year ago, I put a lot at the feet of this market in this wheat corn spread.
Well, let's keep the corn conversation rolling and let's flip it over and look at the latest soy corn ratio chart you shared with me here. And, we saw a bit of intermarket spread action in corn and beans on the day Wednesday. I know a lot of that seemingly tied to the weather forecast, but what are you seeing with this chart? What's your thoughts here right now with corn and soybeans too, Mike?
Yeah, if you go into a report, a WASDE report, it is very common, in my opinion, the last 2 days of the trade before the report that the trade comes in and buys beans and sells corn. And that's typically because USDA sees less demand slippage in beans and less supply increase in beans versus corn. And again, because of the wheat and the grain relationship that corn and wheat both play off of each other after a WASDE report. So it makes sense why they would do that typically. It makes even more sense after seeing China's import-export data last night. They had very bad exports, down 7.5% year over year for the month of May. The trade was thinking maybe 0.5% less. So they are clearly slowing down economically, as you alluded to, Jesse. But their imports of beans for the month of May at 12 million tons was up 24% versus a year ago, and a new all-time record for a month. Asian traders are now saying that they could bring in 13 million tons in the month of June. So talk about a reason to maybe buy November beans and sell December corn and unwind this spread that has taken such a massive hit over the course of the last 30 or 45 days. That's what this chart is kind of indicating to me anyway.
Mike, the other major element in the room we should touch on, I know neither one of us are meteorologists, but the weather, of course, is a big talking point surrounding the grain trade with that dryness in the Eastern Corn Belt, and then watching pretty much every single model run to see what the forecast is going to be. Any thoughts just with the tone from the weather side of this equation in the market?
Yeah, two thoughts. First is, and this is the simple market mindset thought, if we cannot get a pattern shift by this weekend in Champaign, Illinois, and Lafayette, Indiana, don't see an inch and a half rain, I'm going to take that 181 and a half and 52 bushel yield for corn and beans USDA suggesting off the table for good. I am of the view, and farmers that I work with that sell seed, agronomists that I know, we're all of the view for the most part, Jesse, that it's not July 4th that makes the corn crop. It's really the ear length, and we're doing that right now. And I've gotten pictures just like everybody else, or I've gotten clients that are standing in fields from east central Nebraska all the way over to Olney, Illinois, Lafayette, Indiana, and as I said, all the way pretty much to the Ohio border, seeing a really tough crop. USDA made that official this week. So that's point number one. Point number two is a long time ago, 10 plus years ago, my oldest brother, who's a very good meteorologist, helped me understand weather in the United States a lot better. And he always talked about how he did not buy into El Nino in the United States. He thought it was too loose of a relationship. I think that's proving out again. His opinion, I think, still stands 10, 15 years, go fast forward. The second thing he talked about was if you have a U.S. weather pattern in the summer trying to establish itself, you're going to have a pattern probably for 20 to 30 days, but then there's going to be something that come in to try and push it out. That's our high pressure ridge over the Great Lakes. Right now, the European and GFS models have been in disagreement as to whether that gets pushed out enough to bring rains in or whether it reasserts itself. What he taught me was if it reasserts itself, you probably have another pattern locked in for about 20 days. That can really hurt our yield potential. So I think this is the make or break. This is the billion or $2 billion crop, or the difference between a 12 billion bushel crop and a 10 billion bushel crop here, or 15 and 13, however you want to look at it. It's a big number that we're going to make here in the next 10 to 15 days. And I think that's what's really even more important than July 4th.
Great thoughts there. Let's flip over to livestock as we're talking with Mike Zuzolo here today. And it felt like early on Wednesday was a consolidation day in cattle and hogs, and then we slipped even lower with some triple-digit losses creeping into the market. So let's start on the cattle side first. What's your observation after Wednesday's action, Mike?
The big observation is I wrote clients last night, and I wrote them earlier this weekend, and I really wanted to hedge this week because I feel like we're in a blow-off top mindset in this market. And I'll feel better about saying that once I see the weekly close, once I see the Commitment to Traders report. Keep in mind, the feeder cattle have now gotten up to the 2014 price levels. That's really important. We've now hit those price levels. They've been dogging it compared to the fat cattle market. So now we've hit it. And this was during late session that I printed or sent this chart out to you. We hadn't closed yet. And so now the fat cattle working an outside day on a daily chart, feeders working an outside day. We're actually now back to where we were last week. So we've erased all of this week's gains. And I think that's probably this blow off top mindset. But the managed money net long was around 108,000 contracts, futures and options in live cattle last Friday. We'd gotten up to about 155,000 in 2019, Jesse. That was the highest we've been. We didn't go that high in 2014 or 2015 for live cattle and managed money in terms of net longs. I'm thinking we're probably at about a 130, 135 number. So I think we're closing in on the 2019 levels. If we are, I think this is probably a place where you really want to get some hedges in place in the form of bought puts. And I say that gingerly because I'm not trying to call a top, but I am looking at profit at this point. I have been for 3 weeks, and I've been very patient as a seller to let this market develop. And what I've noticed this week is the hogs were on board with the rally, and the equities markets were on board with the rally. That too has been broken down as of Wednesday's close. And I think finally, what I'd say about the cattle market and the hog market is we've still got a lot of sow liquidation out there. And I think it's really important for producers, cattle producers especially, when they think about 14, 15 levels. Hogs are around $50 cheaper than they were back during that time period when the cattle were moving at price levels that we just eclipsed by $7, $8, $9 this week. So it makes sense to me that you're going to have some weight. You're going to have some cement shoes on again when it comes to being able to go higher, because you're going to have more supply out there because of these sow slaughter numbers that have not stopped going up.
One thought as well, in the cattle market, the cash trade, we got bids out there today, but still waiting to see what that activity is going to look like this week. How badly do Packers need and or want cattle this week? I think that remains to be seen on the cash side of the trade, Mike.
That's an awesome point, because June is in delivery now at this point in the fat cattle market, and that's what got us to 180 was that cash test, light test of 183 to 189 in Nebraska. Our leader that we've rightfully pointed out is that's the leader in this cattle market, and the futures traders thought, hey, if we're 183 to 189 in Nebraska, it's not hard to get to 180 plus in June. So now the June is trying to keep up with the cash. But as you say, we kind of went into blind zone here and have a little bit of a fog in terms of what the actual cash market is because of this light test market. So that's, again, a key element to the Friday close, as is the WASDE report. How much more pork does WASDE put into their third and fourth quarters because of this extra long sow liquidation? We get fresh numbers in livestock just like we do in grains from USDA on Friday's report.
Well, Mike, let's sum this all up. Very interesting week. Still got volatile markets. Obviously, a lot of factors swirling around things heading into a key report day on Friday. So, what's your overall thought, message you want to reiterate for farmers and ranchers here as they're looking at their marketing during a pretty key week like this one?
It seems as though the last 30 days, and maybe even the last 60 days, maybe USDA hasn't caught up with it yet, that the global demand for grains is really good. It's really strong, where it's the U.S. demand that's so weak. I want to see if that plays out in this report, and then whether the trade catches on to that it's not really a bad demand market. It's just a bad U.S. demand market. And have we gone low enough as a result of that? The second thing I'll say, Jesse, is kind of the repeat of almost every month before WASDE report is, does the global wheat number provide us with a low in the European wheat futures? And there's a trend line that's drawn off of last May's high that we're getting closer and closer to trying to violate and take out to the upside. If we can do that on a weekly basis, I think we can start maybe calling a low in the European wheat. And that finally cleans house in terms of bears so abundant in the wheat market here in the United States.
Great thoughts, Mike. And I know if folks want to reach out with questions, comments, take a look at your research, you have a lot of great stuff available online. How could folks find you and reach you, Mike?
Yeah, I'd encourage you to go to globalcomresearch.com. It's globalcom with 2 M's, research.com, and just hit the free trial button. Tell me what's your name, your phone number, and your email is, and we'll get you out a 2-week trial starting right away.
Fantastic. Globalcom with 2 M's, research.com. That's where you can find Mike Zuzolo of Global Commodity Analytics. Always great to talk with you, sir. Have an awesome week, and we'll talk to you next week.
Thank you, Jesse. You too.
Thanks so much. That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.